Rob Words, and I'm here. It's 7:03, so we'll call this meeting to order. Let the record show that all 6 of us are present. We'll move on to correspondence. I know that Orla has been in touch with us with information that we were looking for. I'm not aware of any correspondence outside of that. Anybody aware of any correspondence outside of that? I did hear, actually, I got an email. I reached out to Ken Slater to ask him about the Northeast District Department of Health. And I'll share that with you guys when we get to that section. Any other correspondence? All right, hearing none, we'll move on to citizens' comments, and it is budget season, so I ask 3 minutes total for each person, each citizen who has a comment. If there is a citizen who has a comment at this time, please enter your name into the chat platform or unmute yourself and let us know that you want to make a comment. Is there any citizen who has a comment at this time? Any citizen who has a comment at this time? Okay, looks like Jessica Bolte would like to make a comment. Go ahead and Amy, if you can unmute Jessica, or Jessica, if you can unmute yourself and go ahead and share with us what your comment is.
1081 Riverside Drive. I made this comment in last year's budget season. Pretty sure I made it in the year before. It seems we waste a lot of time on questions from Board of Finance members because they're not attending other boards' budget meetings. And I'd like to see in future better participation from Board of Finance members in those particular meetings.
Thank you. Any other citizens' comments? Any other citizen have a comment at this time? Any other citizen have a comment at this time? Okay, we'll move on to budget workshop. Orla, I don't mean to put you on the spot, but I know that you had some communications today that I believe were insurance related. We were kind of waiting to see what numbers you might have gotten from our broker. Is that
Sure, yeah, we met with HT Seeger, our insurance broker today. So we don't have as great news as we wanted, but the good news, well, there's some level of good news. They're still marketing us. They're still waiting for renewals, but they have estimate our renewal to be no greater than 10%. So the initial came in January at 14. So we can certainly reduce down the anticipated estimate for fiscal 22 at 10% versus 14. I have not plugged that into the calculations as yet, but if you're good, I could make that necessary change now. And it affects 2 different departments.
Yeah, is it, are the dollar amounts significant enough to make it worth our while to put those numbers in there? I mean,
well, either way, I would like to make the change.
We're just talking about whether or not to make them like right now. If the dollar amounts are reasonably significant enough, then by all means, go ahead and let's see what that does. It's just, if we're talking about a marginal amount, then.
Okay, so there's a savings of less than 10,000 on the workers' comp side.
Oh, that's just one line item, right?
What was that?
That's just one line item?
That's one line item.
Right.
And then
okay.
On the other, hang on a second. No, overall it's about $10,000 to $12,000.
Okay. Well, you had mentioned it was close to 10 in the workers' comp line, right?
Well, combined, let's see.
Might as well.
No, it's a little bit less than 10.
Okay, but still.
Yep, it's
I wasn't sure if you were talking about like $1,000 or something.
Yeah, 7. It looks like it's 10 overall. So it's 7,000 and approximately 3,000 here.
So I would say, yeah, by all means.
Okay, thank you.
Let's go ahead and put that in and see what it looks like.
So about $10,000 difference.
Great.
Hopefully it'll come in less, but at least that gives us a little bit of reduction.
Yeah. Were you able to share when you get a chance, share the spreadsheet?
Oh, I'm sorry.
No worries.
I'm sorry. Here am I working away, forgetting.
It's all right.
Okay. Okay, so I made these changes here.
So that's
Reduction of 7 on the workers' comp side. I'll give you the actual dollar amount. Just bear with me 1 second. $7,084 reduction on the workers' comp side.
So I think in our booklets, folks, that's
Page 95.
95 and 96.
Yeah.
All right, so let's see, that's workers' comp 511120. And that's oh, I can't see 511120 anymore.
So we're looking at, oh, too far gone.
Yeah, I was looking at line, oh, there it is.
Okay, so this is the line,
Yeah.
sorry, this is the line item and it's been reduced by $7,084.
So now it's going up 17,711.
Correct.
Okay.
And then on the insurance side of things, I'll just make this a tiny bit bigger. So the insurance side of things, there is a reduction of 3,164, and the increase is now 7,911.
Got it. So that was that's page 98.
It is correct.
All right. Okay, got it. 7911. So now it's going up 7911.
Correct.
Thank you.
No problem.
And Orla, by chance, was there any change in the fire and rescue, the fire and rescue department budget? Was there any change to volunteer fire insurance by chance?
No, no, they still market that and they weren't able to give us a reduction at this time.
Right, so that's
Let me just see what we have in there for the increase. We have 7% in there. I'd be inclined not to change it at this stage.
Yep. All right. So the 6056, that's pretty much where we're at.
6056, correct.
Okay. Any other info as far as shifting of income, revenues, expenses, expenditures, any other info, anything that moves any numbers around?
Sure. Just in relation to some questions that have been brought up, I will share this email with you guys later on. I know a question came up with regards to the increase in the number of building permits. So we have seen a significant number of building permits in the last year or so. Many projects are rehabs, but there is a significant also number of new homes. So how it will work is until such time as the CO is issued and occupancy occurs, the assessed value stays at the land value, not the property, including any potential buildings on the land. And usually it takes 2 fiscal years for it to end up on the grand list. For example, if the CO was not issued for a home in October 2020, it's not going to appear on this year's grant list until next year. So we're not going to see a significant increase in revenues and tax revenue for those kind of properties until fiscal 2023. One of the other things was we also talked about
Question on that topic. Well, sorry, if you're moving off that topic, I had a question on that topic, Rob.
go ahead.
Is that the case that it goes from land to full value? I was understanding that there are increments along the way. If you're taking 6 months to develop a piece of land, that there could be reassessments along the way. Is that not
That's not what the information that I was obtained from the assessor. That's not my understanding, but I can certainly clarify that for you after the meeting.
Thank you.
One of the other things that was discussed last week was Rainey's suggestions on revised revenues for fiscal 21. I did have a conversation with Paul, the assessor, with regards to that Nutmeg Industries property. And at this time, once Paul has submitted the request to the DECD, we will receive half of the $42,000, but not in this current fiscal year. It'll come in fiscal 22. Over the 5-year period, we'll receive the other 50%. And at the end of the 5-year period, the property owner will no longer be tax exempt and they will be liable for the full tax liability. The current assessed value on that property is approximately 1.4 million. I will also be sharing, I know, Steve, you had asked me for some information on contingencies. I have an email ready to send off to you guys. I can certainly share it now if you'd like, or would you like me to send it afterwards?
Is that?
Why don't you just send it off?
To Steve? You just want me to email it to you?
If I'm the only one interested, sure, just send it to me then.
Yeah, I can send it to the whole board. I just didn't know whether, I know you had specifically asked, so if you would like me to share it now, I can do so, but if not, I can just send it to you after the meeting. I did get some information just very recently from Rich. He would like to look at, is Rich on the meeting here? Just let me check and see if he's here.
This is
Yeah,
Amy.
he's
Rich
here.
is in
Great.
Here, yeah.
I'm here. Or
Oh, he's here, yeah. Great. So I'm going to bring up the department that you sent me some information on, and if you'd like to discuss some of this, oh, wrong one. If you'd like to share some of the information that you texted me.
Computer. All right, so I sent Orla a quick text about line item for highway signs. So the current proposal is 10,000. We had discussed the fact that I haven't been utilizing those funds, and a brief explanation was other priorities have kind of taken place of being able to do that. We still have a third of the signs left that I ordered in the last order that still have to be installed. So my thought on this is if we reduce that 10,000 to 2,500 for this year, that $2,500 with also any encumbered funds that are left over from this year's money would allow us to continue that project into this coming year, but essentially reduce the budget.
So, Rich, you mean with $2,500 we can get through the end of fiscal year 22 with the money that we have and the 2,500 that comes in? Is that what you mean?
Yes, that's my current proposal.
That's great. Thank you. So that is highway signs, line number 533070. And you said $7,500 we can reduce?
Yes.
So I'm going to make a motion that we reduce by $7,500 the line item 533070 found in the Department 3202 Public Works section of the budget. I make that in the form of a motion is to reduce that by $7,500. Is there a second?
I'll second.
So Rhonda has the second. Is there any discussion on that motion? Any discussion on that motion? Okay, we'll go around the table. Rob Mann,
Yes.
Jim? Jim? You there, Jim? Jim? Okay, Rhonda?
Yes.
Steve?
Yeah.
Rob Wurge?
Yes,
Jim, you there by chance?
I am. Sorry about that.
And you vote yes?
I did.
Okay, and I'll vote yes, so that's unanimous at 6-0. Thanks, Rich.
You're welcome.
Orla, anything else that you want to guide us on at this time? Oh, you muted. Orla.
Oh, sorry, not at this time, no.
Okay. Is there anywhere in this budget that anybody wants to go to first?
Aaron, can I ask one question?
Go ahead, Rhonda.
I just want to make sure that we've gone back to all the highlighted areas that we had previously. If there's any changes that we could make on those, we just go ahead and get that cleared up, or have we already done all that?
So for the most part, I think we're good. I do want to leave the hydrants. I thought that dollar amount was changed, actually. Oh gosh, give me 1 second. This should be different. I brought this department up just in case you guys wanted to go over the firefighter rebate again.
I do.
Okay, I'm just going to look.
Orla, you're muted.
I'm just going to look up the information on the hydrants while you guys talk.
And actually, that was something I was going to propose, that we make a reduction to.
And so Aaron, I was just curious, after we did this, if we could see where we are, big picture, and then maybe go over to the capital.
Yep, we could do that.
If everyone's good with that, of course.
I'm good with that too. I had a couple items outside of the capital, but we can go over those later.
Yeah, I've got some operating
So do.
and stuff.
I actually don't have it with me. Amy, by any chance, do you remember how much the proposal was when we got it from Connecticut Water?
If I remember, and I don't have the proposal in front of me, I could probably search it, but I think it was 83,000.
Okay, I'm going to suggest that we change it to 83 then.
Great, so we could bring this down by 5?
Mhm.
All right, and so this is just reflecting what a number that we've gotten, a clearer number, as opposed to the Board of Finance making a reduction.
That's correct.
This is just having updated information and now making the adjustment.
Yes, that is correct.
Great. And I've got one more thing to share before we leave this page.
Okay, I'm just going to complete this box, if that's okay, and I want to take
That's
the,
it. That's it. I wanted to just be quiet while you do it so that you can do it
Yep.
correct.
me and my little reformatting.
No, that's fine.
Okay, we're good.
I was gonna go to firefighter refund / exemption,
Okay,
522550. And I know this, I think, was Rini involved in this conversation?
Rainey was involved in this conversation, so it's approximately $45,000 that we'll be paying out for this year. So the suggestion was to increase it to 55,000 to cover any additionals.
And so we anticipate 45 through the end of fiscal year 21.
21, in fact, I can make the change here if that's okay. Not that this affects our budget, but I'll make the change anyway.
Because I was gonna see if we could shave back $10,000.
So bring it down to 50?
Right, but I'm not saying that that's in order. I'm just saying that was something I was gonna float out to see if we can bring that down to 50.
Did Rainey suggest 55? Did you just mention that, or?
No, okay, so he said he was unclear as to what we should submit for 22, but I was really working with what we had for 21. So knowing that we have an increase in numbers, we have the increase in dollars from 1,000 to 1,500. And my understanding is there is potential change in the Connecticut state statute that could increase it up to $2,000. Is that correct information?
Orla, this is Amy St. Ange. That's correct. However, it would have to be adopted at town meeting first, well,
Oh,
first by the
that's
Board of
right.
Selectmen and then at town meeting. Additionally, the Board of Selectmen is considering switching over to the exemption. If it was me, and this is just my 2 cents, I would bring it to 45 for next year.
You think leave it at level as we have the estimate for fiscal 21?
That's my thought.
My only concern is if we did pass it, when would we be likely to hold a town meeting for the additional up to 2,000? Is it likely to be in the short term or?
I don't believe that that's not going to be a consideration as far as I know, because our intention is to potentially switch it to an exemption,
Mhm.
which would not be a dollar amount of 1,500 or 2,000. It would
It's
just
true.
be a reduced assessment.
Of the taxation.
Correct.
Okay, I think we've brought this up before with regards to why it's still in there. It's really in there until such time as it's passed a town meeting, which is not going to happen until after we go through this budget cycle. If we do go through the budget cycle and it becomes an exemption over a refund, I will request a budget transfer during or at the end of fiscal 22 to make that necessary adjustment.
Yeah, Orla, can I ask a question? Oh,
Sure.
go ahead. My question was, if they do swap it around, is there going to be a decrease in revenue on the tax end if they're just
Yes.
gonna?
There
Okay,
will.
so I mean, so if we did one of these, we would do the other one too today, correct? Okay.
Well, I would not decrease the revenue at this stage because it has to go through town meeting, but I would essentially, that the thought process from Amy is that with the tax exemption may be similar to what we paid out this year of $45,000, which would include additional members that are now eligible that may not have been eligible for a refund. So instead of increasing it, I don't want to speak for you, Amy, but I think what you're saying is instead of decreasing it or increasing it, leave it level as our estimate is for fiscal 21.
If I might, I'm delighted to see it lower, but if the refund is going to go up 50%, why do you think we're going to spend the same amount next year? And let's just assume for the moment, which is what we're assuming, that it's a refund, not an exemption.
So if the oh, go ahead, Amy.
Sorry.
Yeah, go
Well,
ahead.
we're not anticipating the refund to go up. It's not, at least not my intention to bring before the board the increase to 2,000.
Are we going from 1,000 to 1,500?
We are at 1,500. The 45,000 that Rainey had calculated includes that $1,500. It's not the $1,000 amount, it's the $1,500 amount.
Gotcha. Thank you.
You're welcome.
So then, if $45,000 is considered to be safe and we put it at 50, I would think we're more than safe. And that means we could shave 10 off of this.
I think you'll get your 10.
Well, it sounds like 45 is appropriate. If I
I'm
understand
willing
correctly.
to do 45.
That'll even be more.
I-
Yeah.
I figured I'd float 50 just to see what the appetite is, but you know me, I'm always happy to come down to 45 if somebody tells me I can do that.
Amy's right. The exception is going to be less than $1,500 or $2,000. But there may be some additional people eligible that won't have been before, but you know, it is going to be less. It's definitely going to be less.
I'll tell you what, I'm going to make a motion that we reduce down to $45,000 the amount that's in the line 522550 in the Department 2202 Fire and Rescue Department section of the budget. Reduce that line, that's also known as the firefighter refund / exemption line. Reduce that down so that it reads $45,000 instead of $60,000. I'll make that in the form of a motion. Is there a second?
I'll second that.
Jim's got the second. Any discussion on this motion? Okay, we'll go around the table. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
Yes.
Steve?
Yep.
Rob Worthing.
Yes.
I'll vote yes. That carries 6-0. Okay, I'm done with this page. I know I tell everyone I had a couple, one more thing I wanted to discuss on this page before we get off of it. If somebody wants to go somewhere, that's fine. I'm okay with that. I've got some tabs in the operating budget, but I'm okay with going to the capital improvement plan if Rhonda wants to go there.
Can I ask a question first?
Go ahead, Jim.
This is for Rich. As far as I can see in here, as far as paving goes, you got a $500,000, $500,000 in the budget. But on top of that, you're talking about doing aquatic. So am I correct to say you got $500,000 worth of paving projects besides Aquatic Town Farm Road?
Jim, I think it was reduced to 450,000, I'm sorry.
That's correct.
It dropped to 450?
Yeah.
Yes.
Up to 450.
I'm sorry.
No worries. No worries.
But that is two separate line items, am I correct? Aquatic is a, because the aquatic project is 705,000 with all the necessary things that have to be done.
So basically that all comes out of the paving fund. At the moment, our balance, I don't think it's increased since this paperwork. So what I
Oh,
have.
we did. We got LOSUP in actually.
Okay,
Yeah.
all right. So going off of what I have from the capital request that I initially put in, we had 585,000. So that has gone up a little bit with LOSUP, but we were expecting that those funds were already kind of accounted for in this year's proposal. So what we're looking at is a $705,000 cost estimate for doing the Aquatic Road project, plus the cost of doing the box culvert replacement project on West Thompson Road, plus any other road repairs and stuff that we're doing this year. So that 450,000 goes on top of what we currently have on hand to pay for those projects.
Thank you.
So Rich, if I follow you, you need the 450 in order to do Aquatic Road, box culvert, and any remaining funds for other projects that come along. Is that what you mean?
Correct.
Yep, thank you. Okay. Well, we're now in the capital improvement plan. I know that's where Rhonda had requested we go. Rhonda, if there's
Before we
anything
go
you
there,
want to
can we,
discuss,
can we go to the big picture to see where we are as far as
Sure.
what we've
to the
done so
home
far?
screen?
Yeah, please.
Take a look at the home screen.
The reduction we have so far is approximately $37,000.
37,000, is that what you said?
Approximately, yeah.
Okay, so we're at 1.43. Okay.
Orla, can you clarify that? Because that's the same question I had.
Clarify, sorry, Rob. Clarify what?
Moving up, I think it
Oh.
would help.
Oh, yes.
Just to explain where that deduction's coming off, I think the 983 versus the 1.
So I'm just going to highlight this area here. So the sheet that I sent you guys out today, I'm just going to make it a little bit smaller. And if it's too small, tell me. But let's go to the end here. Okay. Is that big enough? Can everybody see it?
I can see.
So a couple of things. Aaron, you had asked me to share some information on proposed mill rate increases. These dollars are a moving target based on the changes we just made. But in relation to the main changes that we've seen here, so the budget, we increased the budget. This proposal increases the budget by 1.029 or 1.02 million, which represents, oh, hang on a second, sorry. It's actually a reduction now. It's 983, so, which represents 3.67. As you know, we offset a number of things and we adjust a number of things to get to where we want to get to in the tax warrant. We reduce it by any revenues that we're receiving in. There is a reduction of $388,000 on the numbers of revenue that we're receiving from fiscal 21 to fiscal 22, and that's in many areas. Most of it is not in state and federal funding, it's mostly in local revenues. So that represents 3.94% decrease in the revenue that we have to offset the budget. We do put additional adjustments in, and it's the two that we take into account are doubtful debts, that low percentage, and also veterans adjustment. In the case where we are talking about now is, you know, we would end up adjusting the tax adjustment for the fire abatement should that become an exemption. That gives us our tax warrant, which is increased by 8%. But our mill rate at 1.3 is only an increase of 5.9%. So the difference here is approximately the change in ground list. Our mill rate last year for fiscal 21 is based on the ground list of 708, whereas this is based on 722. Did anybody have any questions on that? If not, I'm just going to scroll up the page a bit. This information that I'm providing down below comes from a couple of different rows I have here. These two rows here contain the budget numbers from last year. Sorry, hang on a second. Yeah, the increase is the budget increase in dollars and the tax warrant increase in dollars. And if we scroll up here, we've got two line items here. This is fiscal 21 proposal. This fiscal 22 proposal, I'm sorry. And this was fiscal 21 approved. Usually I have these in here, but I hide the columns, but I unhid them today so I could make sure I had the right formula down below. If anybody has any questions about these. Okay, where did we want to go from here?
I think Rhonda was talking about
Oh,
going to
capital.
the capital improvement plan, but wanted to check the summary page before.
That's right. Well, if we're talking about mill rate increases, there you go.
What I wanted to talk about, Aaron, first was the sheet, section schedule 4 that Orla had sent out earlier to all of us. And
So
this
if you
is a-
just bear with me a second, I'm going to share that. I'm sorry to interrupt you, Rhonda.
No,
I'm just
no
going to
problem.
stop this share and I'm going to share that document because I have it open here.
Because I think this is going to give us a big picture on all the different scenarios that we were talking about last week, so we can make more of an educated decision.
Sure. So if you want, I can just briefly go through this. So this is where we were in the audit. We
Before you
will,
do that,
oh, go
Orla,
ahead.
I just want to make sure that you capture what that percentage represents and how it affects us big picture as well. Just for people
So-
that might be on the call as well.
Sure. So the auditors shared their recommendations. Ideally, they would much prefer us to be 15% in our fund balance, but typically we have been, certainly in the time that I've been at the town, it's been hovering between 7 and 10%. And that would be our unassigned fund balance, which means that it hasn't been associated with any specific project. Currently, we have 1.817. We have budgeted for this current year, 284,000, but based on the estimates that we're looking for fiscal 21, I estimated around $120,000 of that 284. So that'll give us more money that we can put back into the fund balance than we originally thought. There's two projects that are ongoing at the school. One is the oil tank replacement and the security grant. both of those will be reimbursed a portion of. The underground, I believe Bill Birch submitted the application this week, so I'm not sure how long it's going to take, but hopefully we'll get it before the end of June, and that would be approximately 240,000. The security grant on the other side, that's been an ongoing project for a number of different years, and because of COVID, the school wasn't able to complete the project last year, but I know Bill Birch is in the process of obtaining pricing for the gate project, which is part of the security grant. So once we get those funds in, there has been an appropriation this year to cover the litigation for the sewer project. So we've reduced our proposal by $200,000. So if everything comes back in and everything goes as we're predicting and forecasting, we will have at the end of fiscal, once all this money is in, we'll have this available fund balance to us, which is approximately 7.9% of this current year's budget. So what you guys had suggested I do is take some scenarios and see if we were to take that 2.114, and then if you'd like, Rhonda, I can go through each of these. Is that what you would like?
Yeah, because essentially we want to make sure that we keep that percentage. I would like to see it above 7%. So that because it affects our bond rating, is that correct? Or
it does. It affects our bond rating. So one of the challenges we have is we actually don't have a lot of debt, which is a really good thing normally. But when you're trying to borrow, bond rating is based on activity, and we haven't had an update to our bond rating in over 3 years. And it's because we haven't borrowed any money. So when we went out to the school roof project, I think I might have shared it with you guys last week when we were on that call, a number of banks were choosing not to bid on the project because they didn't see a lot of recent history. So we did get a decent rate in the end. So it didn't falter us too badly, but going forward, the goal would be is to try and keep it above 7, as much above 7 as we possibly can. Now, obviously, we're below 7. I'm just going to scroll back up to the page again. As the auditors pointed out in their review, we're below 7 currently, which is not a healthy place to be. But we do know that we are due to receive some additional funds back. So that's going to make it a little bit easier for us. Let me scroll back down. So with that being said, if we were to start our fund balance again with everything being received, all of the necessary reimbursements coming back to us, we would start with 2.114. Now, if we were to fund the 2 proposed vehicles outright, our fund balance would become 1.716. Now, taking that into account, the current budget we have, at least the current budget we had before we reduced the $37,000. If we were to take that current budget and reduce it, in other words, essentially take those vehicles, knowing that we were funding those vehicles by fund balance, it helps us bring our budget down, and that would mean that we have a fund balance of approximately 6.27% of that revised budget. So each one of these scenarios is taking into account any specific changes that we're electing, but also how it affects the bottom line budget. Scenario number 2 would be where we pay off the current notes for lease to own. So as we know, we have 5 lease to own vehicles, or at least 5 lease to own leases that have different terms. So if we were to take whatever the payoff amount on those currently, it would be $515,000. That represents.
Can I interrupt for just a second?
Absolutely, Steve.
I could not figure out where the 515 came from.
So the 515 was provided to me by the leasing company as the paid off amount. If we were to pay them off tomorrow, that's what we would have to pay.
When I added up the numbers you gave us on the principal balance as of 7/1, which actually I think included projected future interest payments as well, it came up to substantially less than that, like I believe about 465 or something, 456, something like that.
Okay.
I'm sure where the 515 would have
Don't
come
have
from.
those numbers in front of me. Well, I can certainly clarify with the leasing company, but that's the information that I was provided on Sunday. I'll take a note to just confirm. It could be a number of penalties, but I don't think those to be penalties on these paying off these leases early.
Yeah, if there's substantial penalties, if this actually costs us more than paying it out, wouldn't want to do that, but.
So it would be 5. Okay, well, either way, I'll confirm those dollars before we make any decisions. But That's what I was basing it on. So approximately the 515 would be 0.95 of a mil. So by doing so, we would reduce our fund balance, and we would also reduce the need for the debt service in their budget, which is $169,000. Unfortunately, it would bring our fund balance down to 5.8%, but it would reduce our budget. Scenario number 3 would be is finance both vehicles, lease to own, which is approximately $88,000. Scenario 3 also was pay off all the notes. So basically pay off the 515 or whatever that dollar amount should exactly be, and replace the full cost of the vehicles, which is currently in the proposal, and replace it with a financing of $88,000 each year. So my change would be 1.14 to the mil. And this is the reduction to our fund balance, and as a percentage of the revised budget, it would be 5.83. Scenario number 4 is we finance both vehicles, similar to what we were doing in the last one. And we would also refinance all of our current debt. So the rate that he was proposing to me today was 3.99%. I did ask him to go back and see if he could get anything a little bit lower than that, and also to come up with a debt schedule, which kind of looked a little bit odd. So, but the goal was to try and keep the annual payment of debt service approximately 169. But either way, if we chose to go down that road, there would be no change to the surplus, but the adjustment would be made on the budget side to reduce the full cost of the vehicles down to the debt service of a lease to own of $88,000.
Can I ask a question, Orla, on that one?
Sure.
If I remember last week when we looked at refinancing the debt service, we were gonna leave the payment the same. Was that the 169? It was
Yes.
Rob Wurge's suggestion. If we were to just refinance it without leaving the payment the same, would that affect the mill rate? I mean, is it an insignificant amount there, or would it?
Well, it depends how you wanted to spread it. So my suggestion was, if we spread it over 5 years. So let me just, can I flick back to another page for a second, please? I'm just going to stop sharing for a second. The reason why I want to bring up the other document and go into the debt service lines. It's going to be easy to flick back.
Thank you.
Yeah, no problem. So if we look at the terms here, there's 2 of the vehicles will push out to 2013 or to fiscal 23 or 24. The others are going to be in fiscal 22 or 23. So what I suggested to him was go out 3 years. So so whatever debt service we would incur, it would be 169 each of the first. This is what my proposal to him was, 169 the first 3 years, and whatever is left, we would pay in the 4th year. So it's not that far off what we're paying right now. But
No, it's not.
in
Okay.
some of
I
the
just was-
future years, we'd end up paying more.
Yeah, I don't think it's significant enough. I just was curious.
Sure.
Thank you.
Okay, let me just stop this and I'll go and share the other document again. Okay, so we were on to scenario number 4. No, had we gone? Yeah, we'd done scenario number 4. And the last one was scenario number 5, which Rhonda, you had mentioned to me, which would basically be paying all of the debt, all of the vehicles off and refinancing the debt. So the refinancing of the debt is really not going to make a huge amount of change. It's just long term, we'd pay less dollars. But the change here would be really where we would cover the cost of the 2 vehicles out of fund balance, reducing it down to 1.716, and in turn reducing our budget by the 398, which would bring us back to 6.27. Now, if you want my suggestion, I think we should finance the 2 vehicles, and I think we should refinance the existing debt.
Which is scenario number 4.
It's scenario number 4.
That would have been my choice as well, but I wanted to get the opinion of the rest of the board as well. I know that Steve was concerned about not getting enough interest, on the other money to compensate for the interest charged for the loan. But I think in my, and I liked that idea and it was appreciated to have that input. I was merely always looking, I'm a big picture person more so I was looking at that bottom line, which is a 7.7, keeping us in good standing with the audit and increasing our bond rating and, keeping a little bit of financing going so that we have that, that credit rating, I guess, is, if you will.
Yeah,
So-
keep it steady, show the activity, we are
But
going
it's only gonna bring the mill rate down 0.43, which, would bring it down to 1 if we did that right now.
correct.
So I'm not really sure, how you guys all feel about that. I would love to have your input.
If I might, just a comment, although the percentage of the surplus to our budget is a factor when someone considers lending the town money, it's not the only factor. Another big factor is how much we already owe. Scenario number 4 would mean that we would go from having outstanding on vehicles, I'm only talking about the vehicles, of
Correct.
about less than $500,000 to almost $1 million. And when someone considers lending to a entity like a town, not only is this percent, the 7.7 a factor, but how much you already owe. And with scenario number 4, we're going to add what we owe by roughly $400,000 over what we currently owe. And it would be approaching $1 million worth of debt instead of half that, which is the current situation. So again, an underwriter looking at, are we worth lending to? You can't fool them by financing vehicles and saying you have a larger surplus. I think that's very obvious.
Rob, man, I agree with you, Steve. The other factor is, you gotta remember when we're refinancing these vehicles, if like the 2018 truck, now we're basically stretching out that term also. So, we're actually refinancing a vehicle that's not gonna be as viable at the end of the term as it normally would be if some of it was paid off. So it's a difficult situation to not look at what the value is of the vehicles opposed to use and how long they're going to last to also refinancing. So that's just another thing to consider. I do like the idea of having more surplus without a doubt. Some of these are way too low. I don't like how they look, but that's something we have to take into consideration too. I mean, if we already owe 3 years on the truck and we're going to refinance it for 3 years at the same rate, it sounds like a great idea. But if we're going to stretch out that term on that truck for a longer period of time, and the truck is going to be worn out more by the time we get it paid off, we're going to be looking to buy a new truck eventually. So
Rob, we're not looking to do that with the refis. We're looking to lower the interest rate and shorten the term.
shorten the
of what
term.
it
Okay,
currently
I guess
is.
I misunderstood that then. Okay.
Yeah, so,
Yes.
or I guess I'm a little confused and maybe I'm a little slow is what I like to say. But from my experience, I guess, in listening to the auditors on the audit report, I understand what Steve is saying and all that. And but my question is the 7.7% per se that you see there, is that the number that the lenders look at to determine what kind of loans they're going to give us? Or are they breaking it down, like Steve says, and looking at the debt versus the assets, or are they looking at both?
They're looking at both and a number of different factors as well. But the one subject that the main one that the auditors tend to bring up on an annual basis is our percentage to fund balance.
So where's the second one that's a little lower than this one? What option is that?
What do you mean? The second?
And are any of the other options less than 7%? I
Let me
mean,
just
more
check.
than 7%?
The only one is if we didn't do anything.
If we didn't do anything, okay. So basically, we just kept the financing the way it is. We didn't refinance and lower the rate and keep the same payment. And we decided to pay cash for the scenario 1 would be paying cash for the new trucks, right?
Yes, but it would go down from 7.62 down to 6.27.
Right. So
So because we would, although we're reducing our budget, we're also reducing our fund balance, and the percentage ratio decreases.
So it looks like.
Now,
just
one
me-
other thing to keep in mind, Rhonda, I'm sorry to interrupt you, but I just want
No.
to make sure everybody's aware. This scenario of 2.114 is purely based on us receiving these 2 reimbursements back. I know we'll get the underground oil tank in the short term, but I'm not sure on the security grant. You know, I don't remember the last time we had a grant with Homeland Security, and if any of the Board of Ed are on the call, they may be able to answer that question, but I don't think we ever have. So I'm not sure what the reimbursement time is on it. And especially this project, because it's a substantial amount, this was the $550,000 project. I know Bill's plan is to work on it this summer, but I'm not sure whether in reality the project will be completed. Now, just so you know, because it's a phased project, the first round of it was the ballistics material on the windows. We did receive reimbursement for that portion, which was approximately $120,000. So that is it's not in the opening balance, but it's in the closing balance. The 240 we will get, but there will still be approximately $250,000 that will not be included in this. So that would bring our fund balance down to.
Melinda just added the project is scheduled to be completed this summer.
So, okay, well, that's
That's
great
helpful.
news. That is really great news. So, but if we don't, and again, it all depends on the timing, but if we don't get the full dollars back from the security grant, we're going to start July, or at least by the end of the summer, say, already below that 7% threshold. One of the things keep in mind is we will be looking, so for the school roof project, as you know, we're borrowing $2.5 million. So the project is anticipated to be to be completed by the end of calendar year 2021. With a approximately 72.2% reimbursement from school construction grant project. However, because we will only get the reimbursement, there will be a decision as to what we're going to do with the net cost, which could be anywhere between $500,000 to $600,000, depending on the ending cost of the actual project. Well, the plan, at least in the short term, would be we would go out to short-term loan. We would go to a local bank. You know, that's how our financial advisor calls it. You would go to a local bank and ask them for a loan. You know, the fact that our fund balance is low, and in our audit report, which we probably completed at that stage, our fund balance ratio will be low. That could be a major consideration with regards to that short-term funding for the net cost. So there's lots of different factors. I guess I'm just trying to think of all the different scenarios and all the different factors that are involved in any changes to the fund balance this year. But as I said, in my opinion, I think we should leave the fund balance as is.
I noticed that Bob Gentis wrote in a message into the chat platform. He says, turnaround time for payment is fairly quick.
Oh, that's good to hear.
Yes,
That's great.
good.
You know, if we got it by the end of calendar year 2021, that would be great. We will be at that 7.9%, which is, well, it's not going to be 7.9% anymore, but we will be at that 2.114.
So Orla, the 7.9%, that's if we get the reimbursements that we're looking for from these projects, and we don't buy any new vehicles for public works, right?
Yes, but it's also a percentage of the current year's budget.
That's
So
right. I just want to make sure I understand that 7.9% means not even buying any vehicles at all.
correct.
Right.
So
And so
Orla,
then the scenario 4 was buy the 2 vehicles, but finance them, and then what, refinance the existing debt to make it, to retire it faster and get a lower interest rate? Is that what it was?
Correct.
Okay, thanks.
Orla, can I ask a question?
Sure.
So the 2114533, that's the estimated surplus. Are these numbers based on the budget with the finalization of the budget we're working on? Or are they based on the current budget numbers? And if they're on the current budget numbers, are those numbers going to change when we're looking at the new budget that passes?
For the current
So-
year, Rhonda,
What was that, Steve?
it's for the current year. It's for.
That's,
FY20.
yes, so it is going to change
It
when
will.
we have the new budget. And so, okay, so kind of big picture, if nothing changes and we do nothing, is that 7.9? Do you think that's going to go up or down once we
It's
have?
going to go down regardless, because if you have any increase in budget from fiscal 21 approved to any increase for fiscal 22, the percentage basis is going to go down.
Okay,
And the
So-
earliest, the closest I can give you it is 7.62, and that's based on the proposal that we left last Thursday's meeting with.
okay, so you're looking at the 7.62, and then so the actual number, the 6.27, is pretty accurate in this particular scenario we're looking at.
Yes.
So my opinion is that we go with option number 4. And I would be willing to make a motion to do so, unless somebody else has questions or.
I'd like to weigh in. I'm trying to jump
Sure.
in.
Sure.
Yeah,
My
no, we-
my viewpoint on both of these items, on the refinance, anytime we can refinance current debt and pay less in interest and keep our principal and interest payments the same, that makes sense. I mean, we should do that at any point throughout the year if there's opportunity to do that. To Rob Mann's question about the 2018 truck, and not to get into all the minutia here, but we would extend the 2018 a little bit more, but we would also be pulling the other vehicles that are expiring out in 24. We'd be pulling those in a little early. So I think when you look at it as a bundle of 5, it's a better deal to refinance it, even if you
Yeah,
hurt yourself a little bit, Rob, on that one truck that you were talking.
no, I understand that now. I was misunderstanding that the term was gonna get lower. You know, that some of the terms were gonna get lower. It's all gonna level off and even out kind of together.
We pay it off slightly quicker, probably months, not years. So that makes sense to me. On the
I
vehicle,
agree.
yeah, on the 2 new vehicles, it might be prudent to maybe think about doing one of those 2, the one that's most important, maybe the one that we kicked down the road last year. It'll give us a little extra cushion on the percentage. And certainly knowing now that when we go from FY21 of 7.9 to FY22 of 7.6, we're really running off that 7.6 number. I think perhaps considering one of the 2 vehicles would be worthwhile. And then lastly, Orla also chatted about the school roof and that 500,000 to 600,000 that's going to come through later in the year. We'll want to be in a healthy standing for that. And by financing at least one of them, that'll get us back into the credit markets, and that might help us as well down the road when you're looking at the roof, Orla, because we would have an active, debt structure in recent months versus going back 3 years.
Yes.
So you're eliminating one of the vehicles, is what you're saying. You don't want to purchase it or finance it, just take it out of the budget completely.
That's probably the approach I would take. I think maybe unless Rich said, we'd absolutely have a big problem on the roads with the 9 plow trucks we have and the 9 guys we have to drive them. That could get kicked till next year like we did last year with the roll-off truck. That seems like a responsible approach, but again, the only thing that would weigh me differently on that is if we were just in a really, really bad place on those trucks. And that was not a viable option to move it to next year.
Rich, can you elaborate on the trucks again? Please.
What would you like to know?
Well, I mean, if we're considering, Rob, I don't know if you just heard, but he was looking at possibly only getting one of the 2 trucks.
Yes.
So which one, what's your take? I mean, we went through the trucks before, but I know that the one at the transfer station, whatever that is extremely important because we need our trash removed, and that's a big issue. What about the other truck? I mean, can that one wait another year? What are we talking about? He had said there's 9 drivers and 9 trucks. So if one breaks down, we're down. We can't put another guy to work. What are we talking about?
Basically, essentially, at the moment, we have 9 and 9, 9 drivers, 9 trucks. We had a spare, so if one truck breaks down, that truck takes its place, so we can continue to keep the routes properly staffed. So, I mean, obviously, at this point in time, if one truck breaks, we're down that truck. You know, there are some minor modifications we can make. We still have some of our surplus equipment that we had replaced vehicles. Not ideal to throw a 1-ton pickup truck that was taken out of service on a big truck plow route, but we have done it in the past, and that's kind of how we got through the few issues we had this winter. So, you know, we definitely get done what we have to do. Obviously, not an ideal situation to not have that spare, but if that's what we have to do, we'll make it work.
Thank you.
Thanks, Rich.
Thank you for your, you know, looking at your budget too and making different reductions throughout the whole budget process. We really appreciate that.
Absolutely.
Thanks, Rich. I really appreciate it. Good man.
Somewhat related to that, if I could ask, Rich, when you were considering the cost of the 2 vehicles, is there any trade-in value to the ones that we're eliminating or not? I know they're pretty old.
There will be some trade-in value on the roll-off truck. I know last year when we were talking numbers with the dealer, the discussed number as we got closer to the possible purchase was 28,000. Obviously that was a year ago. We have put some money into the truck. I don't know what the market is this year on that truck. So you know, I would have to say at least 20,000. So that would come off the top, but that's not something that we've discussed at this point.
Thank you.
So what do we want to do?
I'd like to make a motion to reduce the capital of 721 by the value of those 2 trucks. Finance the roll-off truck. In return, that would bring the capital down to about 321.
Sorry, Rob, you're suggesting not purchasing the 9-ton?
I'm suggesting reducing the capital down by the 400,000 for both vehicles and financing the roll-off truck at about $45,000 a year in payments that would go into a cost line on a debt service line.
I'm sorry, and then does that mean not acquiring the 9-ton? I'm not sure I follow you.
That's correct. That's correct.
Tell you what, if that's the case, maybe could we break this out? Would it be okay, Rob? We break it out? Would you be willing to make a motion to remove the 9-ton dump truck from the capital improvement plan?
Sure, you mean break it out and do it in 2 separate discussions?
Yeah, instead of trying to roll it all in one, just break it out.
Sure.
Just
Clean
for
it
the,
that way.
are you okay with that?
I'm okay with that.
So you're making a motion to remove the 9-ton dump truck from the capital improvement plan.
Correct.
I'll second that motion. Any discussion on this motion? Okay, we'll go around the table. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
Yes,
Steve,
No.
Rob Werge.
Yes.
I'll vote yes. This one carries 5-1. And then Rob Werge, go ahead and make your second motion.
Second motion would be to approve the purchase and finance of the roll-off truck at approximately $43,787 to be included in our debt finance.
And Orla, is that correct? I've got a note here. Okay, I wrote $44,000 in my notes, so that's pretty close, right? Okay.
Yeah, this was actually the pricing that I obtained from the leasing company when I looked into it a couple of weeks ago.
Great. So then Rob Werge makes a motion to purchase a new roll-off truck, but to finance it for $43,787 per year. Is that your motion, Rob Werge?
That's correct.
Okay, I'll second that motion. Any discussion on this motion?
Yes.
What's the interest rate on this?
Question.
Okay.
Bear with me 1 second.
First question comes from Steve, and it's what's the interest rate?
You know what? I look up the documentation afterwards, if that's okay. It's buried underneath something here.
Approximately, Orla.
Yeah, it's going to be around between 3.75 and 4% because that was the current rate at the time that we had this general discussion. That the current rate that at the time when I had the general discussion with the leasing company.
I don't mean, Jim, I know you might have a comment as well, but I agree with the concept of acquiring the truck. I'd rather purchase it though than finance it.
Any other discussion?
Yeah, I'd like to ask a question. Are you planning on refinancing the balance of the vehicles, the fleet at that same time, or are we leaving that alone?
I would make that motion after this motion.
Yeah, we can make that motion after this one.
Okay, so it's going to be a 3-part.
Yep.
Yes.
We could split it out, make it nice and easy for Dottie to track in her minutes and for people to understand when they read the minutes. Any other discussion? All right, so this is a motion to acquire a roll-off truck and to finance it for annual payments of approximately $43,787. Any other discussion? Okay, we'll go around the table. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
Yes,
Steve,
No,
Rob Wurge.
Yes,
I'll vote yes. This one carries 5-1. And so then there's just the remaining is Orla, how would we phrase this accurately, correctly, the financing of this existing vehicle debt?
Looking into refinancing the existing lease to owns. There's 5 leases involved in this process, and they are highlighted here. Could I just make one comment? Steve, you were asking me about the 515,000. I believe the leasing company was including this payment, which is due in April. So that would have brought
I
it.
even added that and still didn't get 5.
Oh, what was the difference? Because I didn't get to calculate it.
I don't recall, but
Oh.
again, the numbers you have for principal include interest payments, so I was off, quite a bit. I don't
Yeah.
remember the amount at the top
Okay.
of my head.
Well, unless we just pay interest in the first few years and then pay principal. Either way, I would look into it and get the breakdown specifically. But back to your question, Aaron. The motion would be is to refinance the existing 5 leases to own with maturity terms from 20 to, oh, sorry, the cat's on the keyboard now. It's not the dog, it's the cat. I lost my train of thought.
No problem.
Thank you. I gotta
I'll
think.
tell you what, can you do me a favor, Orla?
Mhm.
Can you go to column B? And now come down to note retirement. Don't highlight anything yet.
Yeah, go ahead.
And then you've got, what does it say? Truck loan 2015? Is that one of the
No,
things
that's
that's gonna
last.
be-
No, that's all set. That was
So
paid off last year.
everything that's highlighted is what's going to get refinanced, right?
Yes.
So
Yes.
here, I'm going to make a motion like this. You tell me if it's off base. I make a motion that we refinance for the terms that Orla has already researched and shared with the board, the following vehicles that are currently under lease to own agreements. Sweeper 2018, 1-ton dump truck 2018, paving box and 9-ton dump truck 2018, 2x1-ton trucks with plows, sanders, John Deere 450L backhoe. Those are the items that I make a motion that we refinance under the terms that Orla has already shared with us. And that's a motion. Does somebody want to second that?
Rob Mann, I'll second that motion.
All right, Rob Mann's got the second. Any discussion on this motion?
I want to ask again, no penalty for prepayment because.
Well, that's what I'm going to look into. I'm going to do some research.
Yes.
What you guys are going to vote to refinance, but either way, I'll come back to you guys before I close out anything. The date that we were proposing for refinancing is May 31st.
But
So-
refinancing, if it includes penalties, makes this onerous. If
So-
the 515 number you've got for paying these off is somewhat correct. Essentially, refinancing means paying these off and establishing new financing.
Mhm.
I'd be very concerned that you're actually spending a lot more money to do financing.
So So I will ensure that I share this information with you guys before I close anything and make sure we're all in acceptance of it. I know if we don't meet after this week, the next time we'll meet is the May meeting. And that still gives me a little bit of time. And if I need to get some information shared with you guys in advance of that, I will make sure I do so. But I understand your concern, Steve. And believe me, I'll make sure if it's not worth our while, I'm not going to do it.
Well, we're voting on it, so it's not,
Well, I know you're voting on it, but I can still come back to you guys before we close on
I
it.
have a very simple solution.
Yeah.
I'm modifying my motion to say authorize.
Yep.
Oh.
I authorize the finance director to do these things. And subject to her providing us with final details. But I authorize her to do this. And Rob Mann, would you be willing to modify your second to say that you authorize?
Yes, I will. And we could actually word it if we wanted to, that as long as there's no onerous prepayment penalties.
I guess what I'll do is, the reason I want to leave it open-ended authorize is because it could be prepayment penalties. It could be anything else that causes us to change our mind. But if
Okay.
we say authorize, then that leaves the door open for us.
Then I will agree with authorize on my second motion.
Yeah, thank you.
Thank you.
So Dottie, that's authorize all of the things that I just said. Any other discussion on this?
I got one fast question. What's the term of the loan?
So we would look to pay it over 3 years.
3
So
years?
36 months, which pretty much is where we are. I mean, for the most part, this is the only one that's, it's a big loan, but this was the one that we actually purchased lease to own for 7 years back in 2018. So that's why the terms end in 2025. So if we do it over 3 years, we'll just end this one a year early.
Thank you.
Any other discussion on this motion?
I would ask during the authorization, Aaron, if Orla could also provide us the net savings.
Absolutely. Yeah, I'll do a full analysis before I go ahead with anything.
Yeah, that's beautiful, because
Yeah.
we're all suspecting that savings. I think when we see it, we're going to be quite surprised if we get it down to 3.5% versus 5%.
Well,
Plus we're continuing to pay the 169, so we're paying a higher amount. So.
Any other discussion before we vote? Any other discussion? All right, we'll go around the table on this one. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
Yes,
Steve,
yes.
Rob Wirge.
Yes.
I'll vote yes. This one carries 6-0. Orla, I'll give you a chance to move numbers around and whatever you gotta
Thank you.
do to catch up, because I know we just made some quick moves around here.
Aaron, once she gets done that, can we go back to the
That's-
first page?
That's what I was gonna do. I just wanted to give Orla a chance to.
Thank you.
So the monetary saving here was 202. 61, 61, Okay, so what we're doing is we're looking at a reduction in the capital budget of 354,474.
Aaron, Rob Wirge.
Yep.
While we're here, I know we want to jump back to the top, to the front page. While we're there, let's stay here. Okay.
So now we're at 0.94.
Yeah.
Okay. And Orla, when you make these changes in the document, the little section that you added, that's a slight scroll down from here, does that automatically update?
I'll have to wait and see.
Oh, yeah.
I can't remember.
Oh, yeah.
I
yeah, it
think
does.
so.
It does.
It
because-
does. Okay, there you go.
Now it says 135 to 0.75.
Yes.
Good job with that spreadsheet.
Yeah. This is your best one yet, Orla. In all your years, this is your best one yet.
I'm always learning.
Just
And I appreciate when people give me suggestions and requests because,
bronze this spreadsheet so that you never lose the rest.
okay.
So
As Rhonda says, we're always looking at the big picture, right, Rhonda?
Yep.
I am.
This is the
am.
big
It's hard for
picture.
me to look at the little picture, so that's
Yeah.
where my value is, not in the details. So Aaron, are we gonna, if anybody else has any reductions that they have written down, are we gonna go through those now and possibly put this budget out tonight, or?
Possibly, but I know that Rob Wurge had requested that we look at something after we look at the summary page.
My suggestion was to go back to that capital page.
Yep.
Maybe highlight the mandatory items.
Which
real
items?
quick. The mandatory items. I don't think the reval we can touch. I was told the school project, we're gonna lose some penalty if we don't do the 2 school projects. So Orla, do you have a sense for any of these that we just, they're really not non-negotiable, for lack of a better word?
The only one that's a little bit out there is really the Bull Hill. I hate to push them further away because we did it last year and now we're doing it again, but that's the only one that's not urgent. On the library side of things, there's a constant need for that repair budget. The roof budget, we didn't put anything into fiscal 21, so I think it's helpful to put it back into fiscal 22. But unfortunately, I can see Bull Hill being the one that we don't really need the most.
Orla, I wasn't necessarily asking for the one that we don't need
Yeah.
the least, the reverse of that, like the revaluation services, we have to do that, right? Are there
Yep.
any have-tos that we just,
So the only thing I'd say on the reval, so traditionally we have funded it over many years because we had a contract with NECOG. We don't have that contract anymore. Paul will be negotiating with a different firm to carry it out. So the reason why we suggested putting in 25,000 each year is that's because we've continued to do that. We might have some play with that just because we don't need to pay it out right now.
Mhm.
I can't speak for Paul, but I know he hasn't contracted to anybody yet and he'll end up putting it out to bid regardless.
Orla?
Yep.
Just as long as we're on this revaluation line, correct me if I'm wrong, but my impression is even if there was any room here, it would probably not exceed $5,000, right?
Well, it
It's-
depends. I mean,
Don't we have to have 100 by year 5? Isn't that the way this works?
we have to have 100 by year 5, but this is year 2022 is year 2.
So do we already have 25 in or 20 in?
No, we've nothing in
Oh, we
because
got nothing in.
yeah,
Oh,
this
okay.
is year
So-
1.
So we got to play catch up. Okay.
We're not going to be playing catch up. So with NECOG, the agreement was we would pay it over 5 years. We don't have any agreement with an additional provider for this service. So at
So-
this stage, Paul has not negotiated any contract.
And it sounds to me like there really isn't any room here.
No, in reality, there isn't really,
Okay.
because we still have to pay it.
And I think that was what Rob Wurge was
Yeah,
trying to
okay,
get at, was
fair enough.
just tell us where there's no room and where there is room. So then.
Okay,
we'll-
so if we scroll down, I think we've all gone through all the public works. The adjustments have been made. I just went through
I
civic and
might
cultural.
comment on the roof fund. That's something we're not going to do for I don't know how many years. I'm not sure
I'm
why
not-
we want to pay for it today.
I'm with you, Steve.
Well, I'm
um,
not sure, the roof is it 20, it's over 20 years old?
We don't, there's lots of
94.
roofs in the town. We don't, do any
27
of- we
years.
don't prepay it for any of these. I'm not sure why we're asking taxpayer to pay this year for something we're not going to do for a long time.
Well,
I'm-
it's also about a capital plan. We talk about forecasting and preparing for needs down the road. I believe that's why it was started in the first place by the Board of Finance.
Well, and I hear you, Steve. I was thinking that, so Steve, you raise a valid point, which is this is the only roof in town where we're doing this.
I'm just gonna
You
bring
know,
that
when we
sheet up.
need to, when we need to do repairs, large scale repairs to the school roof, we bond. We do a project and we bond and we get reimbursed for some form of state assistance if there is any. And it doesn't mean that we don't repair the roofs. We do. we care about our library. We love our library. We're not going to let it get a leaky roof, but it just seems odd that this is the only roof in town where we do this. It just doesn't seem to make a lot of sense, at least to me personally, that there's this one roof that we do it this way. And again, if there's a leaky roof, if the roof on the library needs to be replaced, I'm all in favor of replacing it. It seems odd that we're doing it this way.
I'll make a motion that we remove the $25,000 reserve for library roof repair, or roof replacement, sorry.
I'll second that. Is there any discussion on that motion?
Okay, we're in there.
Any discussion on that motion? Any discussion on that motion? That's a motion to remove $25,000 from the Library and Community Center Building Roof Fund, $25,000.
Yep.
Any discussion?
The intention, Aaron and Steve, to leave the balance there?
That's a good question.
That's a different,
That's a very valid question.
maybe it's a different discussion for a different motion.
That's what I'm wondering. Is it a different discussion? But hold on, keep in mind, that's not the focus of this motion. So just before people start jumping on to talk about what to do with the remaining balance, I just want to keep the discussion focused on this motion, which is to not put $25,000 into the capital improvement plan for that fund. Any discussion on that motion? Okay, we'll go around the table. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
Yes,
Steve,
Yes,
Rob Wurge.
Yes,
Did you say yes, Rob Wurge?
yes.
Okay, and I'll vote yes. That carries 6-0. Anyone want to, if we can at least keep relatively tight, any discussion on what to do with the money that's in the account, what's in the fund? But by all means, I'll open the floor to the Board of Finance.
Rob, man.
Yeah. Go ahead, Rob, man.
I know, I don't know how the grants work, but I know, most of the things that are done at the school, we get a 50%, 70% reimbursement if we spend half the money, if we put the money all out there. So if we bonded that, I'd like to see some savings saved. So there's, bonded or grant, either or, that a percentage is left there. So when the time comes, we do have some money to cover that cost.
Thank you. Any other discussion?
Is the library roof something that we could possibly get a grant for?
I don't know. Is Allison on the call? I didn't see her.
It's possible. But
Yes, I am.
Allison, do you know if library roofs are something that is even eligible for a grant?
I am not sure. Honestly, it's not something, I think they have other initiatives. They prefer handicapped access concerns more so than exterior roof things. It certainly could be something pursued. The building dates to 1994. You were wondering the age of the roof. So it's creeping towards 30 years, which is end of life for that style of roof in our weather conditions. So time is approaching, no doubt. And that's what I could tell you.
How much is the roof estimate? Do you know offhand?
I want to say it's about $250,000.
And we have like 125 in the account?
yep.
Well, I mean, my thoughts are if there is no matching grant available for something like that, then we would probably finance this project or take it out of fund balance. What does the rest of the board think if that were to happen? And if that is the case, then maybe put it all back into fund balance. Just a
Rhonda, I have to agree
suggestion.
with you. I think that makes sense. This is a very strange, it's the only project we do this way, and I'm at a loss as to why. I mean. maybe
Well,
some-
I mean, I mean, I have to, credit them to saving that money because that's what we tried to do with the buses and, all these different things so that we're not stuck with this huge loan. And, at some point in time, interest rates are going to go up and borrowing money may not be the way to go. So, right now it's money is cheap, if you will, and borrowing maybe a little easier, but in the future, who knows? So, we don't know where we were when we started saving this money. So I just throwing it out there as ideas, that's all, for conversation.
Just my thought, if we were to take the money that's in this fund and throw it back into fund balance, it reminds me of using surplus to make the budget go. It's a one-time item. And when you come back the next year, you start out automatically behind by that amount of money. I'm thinking if we want to get Rich a 9-ton dump truck next year, I'd be fine letting that money just hang out for a few months, one more year, and then grab some of that money, throw it at the 9-ton dump truck, and then, do a release to purchase on the remainder of the amount or something, some kind of hybrid, so that we can get that 9-ton dump truck next year for less than what we would otherwise have to incur. And if push comes to shove, and let's say we put this budget out and it gets shot down, and that's usually when we have to start contemplating things like using surplus. Okay, then maybe we look at that fund. It's just that, a few years ago, we had this nice school bus fund that we were gonna save for a rainy day. Well, we blew through that like right away because the budget kept getting shot down. So
Yep.
I would love to see if we can be strategic about that, with the money in that roof fund, rather than just toss it back into the general fund and just pretend like it's good times.
No, I like the idea. I just wanted to it's nice to have all the ideas on the table. That way there we can all, toss it up, because there may be
Yeah.
ideas that we're not thinking of. So,
I hear you.
I'd love to use it to pay off the vehicles we have, but that's a different question.
And maybe we could do that. As long as we just sit on that money for a little while, then we've got options. So is there any other discussion about what to do with the money that's in that fund before we move on to I would like to move on to the next line item.
Can we see where we are now at the overall?
But do you want to wait to change this page so I can save Orla some work?
Sure.
I have in my notes here that John Rice had mentioned that the Bull Hill Recreation Area, 20,000 could be reduced to 15,000. He could make that work.
I seem to recall 10,000. I've got a note here that says $10,000 question mark. And yes, I do have 15,000 question mark.
Oh, I guess I wrote that from must have been my notes. Because I do have 10,000 written, but I also have reduced to 15,000. So that must have been my note.
I'd be willing to make a motion that we reduce that line item to $10,000. So I'm not actually, let me clarify. I'm not willing to. I'm making a motion that we reduce the Bull Hill / track studies line item in the capital improvement plan. We reduce it down to $10,000. That's my motion. Is there a second to that motion?
I'll second that.
Okay, Jim's got the second. Any discussion on that?
I'd like to jump in.
Was that Rob Wirch?
Yes,
Go ahead.
my recollection on this topic was that 10,000 was asked, and John Rice came in and said he's already got about $7,500 or $7,800 committed, and that he'd be more comfortable with 15. I think we maybe shorten him if we go all the way to 10 versus the 15. That's where we landed on. I believe that's where we landed through the prior discussion.
Rob, man, I agree. And also Leslie Munchauer just commented in the comments, 15,000 is the correct number. From what I believe, it was the number that Rob had just thrown out. And it was also some money. So some money was for the Bull Hill, but also some money was for the track.
That's right.
It was both.
Any other discussion?
I think 15 is more appropriate myself.
Any other discussion? Okay, this is to reduce that line item to 10. We'll go around the table. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
yes.
Steve,
No?
Rob Wirch.
No,
I'll vote yes. This one carries 4-2. We bring it, that was a motion to bring it down to 10.
Yes.
Orla? That was a
Um,
motion to bring it down to
Rob,
10.
I mean, Aaron, I'm sorry. I thought that was the motion to bring it down to 15.
Okay, so then I could dig through the details of Robert's rules to try and unwind this, but I think it'll probably easier for us to just do it this way, which
I'll make a
is,
motion that we move it to 15,000.
So Steve's got just made a motion to move it to 15,000. Is there a second?
Second that, Rob Orich.
Okay, Rob Woods has got the second. Any discussion on moving it to 15? Hearing none, let's go around the table. Rob Mann,
Yes.
Jim,
No.
Rhonda,
Yes.
Steve,
Yes,
Rob Woods.
Yes.
I'll vote no. This one carries 4-2. Now it's 15. Okay, I think now it's safe to go back to the, after Orla makes those changes, I think it's safe to go back to the summary page and see where we're at.
Reduced it by 30,000. Give the mill a 25.12.
What was that, Orla?
That gives a mill of 25.12, an
Oh, yeah,
increase
yep.
of 0.9.
To 0.9.
And that was, I think I have two reductions. I have the library roof, we removed 25. And I have Bull Hill, we removed 5 out of the 20. Was there anything else? Did I miss anything else? Oh,
No, not yet.
Or
Yeah,
there's
well-
no place that we can increase the revenue.
So wait, so
Sorry,
just
who was
to make sure,
talking?
to answer Orla's question, it was, you removed the 9-ton dump truck, right?
Yeah, that's already gone, yeah.
Okay, and then there was the roll-off truck is financed. Right, and then, then there was remove the roof. And then there was, reduce the Bull Hill /
Roof is
track down
gone.
to 15.
Okay, okay.
Yeah, and Rich also reduced something as well.
He did, he already had
Everything
reduced
operating.
the road resurfacing budget down to 450 from 500. That had
Right.
happened last week.
Rich reduced something in the operating budget, not the capital.
He did, yes.
Oh, yeah, sorry about that.
And you also have the refinance of the 5 trucks in there too, right, Orla?
Yeah, but that doesn't affect our debt right now. It doesn't affect this budget.
Okay.
Aaron, if I can speak.
Go ahead, Jim.
Unless there's a safety issue at the school, and I'm talking a safety issue, I don't see any reason why the hall floor and the locker rooms can't be pushed back till next year.
Is there someone who can speak to the hall floor and the locker rooms?
Oh, that, Aaron, I guess that would be me.
Go ahead, Linda.
So we are coming up to a NEASC report, a NEASC visit in the next few years. There were recommendations made 10 years ago when they did that initial, assessment of our schools. Many of those things have yet to be addressed. And they are, the track is included in that. The floors are included in that. The locker rooms are included. Some upgrades in the science room. So the longer you push that out, there's going to be a big expense at one point before we have our site visit. So we were trying to make sure that we started to address those things.
Okay. Melinda, you mentioned track and of course hall floor and locker rooms. Is there anything on the list that's looming in the future, or are these like once you address these things, you've checked off your boxes?
Yeah, and we didn't add everything in. Obviously, the science, there needs to be some upgrades in the science room. The track is the big ticket item, the hall floors, the locker rooms, if you've seen them, or you took a look at those pictures, they're in bad shape. Luckily, because of COVID this year, we had to use them for storage for surplus furniture. But as we move that to normal, students are going to be back in those spaces. And that, honestly, that area between the floors, someone tripping on the tiles coming up, and then a student getting cut on the lockers that are, the metal is pulled away from the, it's like a mesh metal, and it's pulled away. So kids could get cut on them.
Go ahead, Rhonda.
What's the total cost for those projects?
Right there on the capital. sheet.
77.5.
Well, that's for a hall
That's
floor
for
and
the-
locker rooms, but
Yes.
I know that, I think Melinda mentioned a science room was going to be added to the list in a future budget.
So
year.
so Melinda, is it my understanding that to complete those two projects, the upgrade of the locker rooms and the hall floors, you just need a one-time 77,000, not every single year after that for a certain amount of time till you hit your number? What are we talking about?
So we're gonna add a project every year as we get closer to the site visit. And that way we're not coming before you and asking for a big amount increase just to repair everything that was in that initial report.
So I guess my thought process, I mean, if we're looking at possibly considering financing the roof on the library instead of a capital savings plan, why wouldn't we look at this in the same way? Just curious. And that might not be a question for you, Melinda, just in general, just throwing that out there.
Rhonda, I'm not sure your question.
I guess the question would be, well, I suppose, I guess those are just two projects. So then next year you'd add another two projects that are totaling approximately 80,000 and so on until all the projects are finished. Is that kind of the gist here of what we're talking about?
Right now, it's the science room, the locker rooms, the floors, and the track is the big ticket
Okay, and
item.
the track. So the track's the big ticket item. So that's in a different line item though. They're doing the beginning of the track up in the recreation and the Bull Hill. That's where that project is beginning right there. So my question, my thing, Steve, is if the total project for these to do these, project, if you've got 80,000 this year and you need another, if you will take the track out of that and you put the other, the science room and whatnot, how much is the cost to do that? And would we prefer to save it? As you had mentioned, we don't want to save money. Why save money for now for something that we're going to finance later? So I'm just looking at the same scenario on that we're looking at for the school library. That's all, the roof there. So, I mean, do we want to start, I guess it goes opposite. We're starting to take money out of one of the other funds that we're currently been saving for 5 years now for a capital project. And we're no longer going to fund that project, but yet now we're going to fund these capital projects and finance the other one. It just doesn't seem consistent is all.
Rhonda, if I could jump in.
Yep.
I think a distinction for me is, the roof is a big project. And these are smaller in scale and they're more maintenance related. Repairing floors and repairing lockers.
So they shouldn't be in capital then.
Well, we've had that
Shouldn't we-
discussion. We have a lot of things that we call capital, but it's not really, the counting of it isn't real capital. It should be called projects, but normally things like this would be expensed, on a yearly basis. You wouldn't finance a repair type of scenario. You
Right, so
finance-
it just doesn't seem like a capital expense to me, that's all.
Capital would be something that elongates the useful life of an item. So if you put a roof on a building, you're elongating the useful life of that building. Just fixing a hallway floor is fixing a hallway floor. That should be in your maintenance budget.
So you're
It's
suggesting
actually,
that,
it's actually a full replacement of the flooring, not just a repair.
so Rob, my understanding is you're suggesting that this should be in the school's budget, not in the capital portion. It should be in the operating section?
No, I'm suggesting that we should pay for it, not finance something like a floor upgrade. I think that's where I draw the line on financing an asset versus a.
Well, I didn't know if they were gonna go on and on, every year we need 100 grand to keep, these projects going or whatnot. So it doesn't seem like a capital item to me, that's all.
We own the building, and if we move it over there, now we're raising our minimum threshold every year. So, I think that's a different discussion, Rhonda.
Okay, good
I
point.
like it right where it is.
Yeah.
They're embarrassing. I saw the pictures. I personally would be embarrassed to show someone. There's not a lot of pride in the neglect in those floors. So I'd love to see it cut out because we need to cut. But my viewpoint here is we've waited far too long and really neglected it far too long. I'd lean toward leaving the 77 in for this year and get those items fixed.
So I got a question from Melinda. Melinda, you mentioned the school track as something that's, along with the hall floor and the upgrades to the locker room and the science room, is important to, I believe you called it NEASC.
Correct. That's our accreditation.
That's right. Can you remind me again, what year are the NEASC people coming to take a look at it?
So it keeps getting pushed up because of COVID. They haven't been able to do site visits. So we have a little bit of time. And so I think it's at least 2 to 3 years out as it stands right now.
So we need to do a floor and a locker room and a science room and a track in time for somewhere in the range of 2023 to 2024.
Correct.
So
May I speak?
hold on. I just got a thought
sorry.
here. And
Apologize.
it's kind of, so it's kind of along the same lines as the roll-off truck versus the 9-ton dump truck. If we were to do, let's say, a floor this year and a locker room next year and a science room the year after, and then somewhere in the midst of all that, I can't imagine that we're going to just pull $415,000 out of our pocket and do a new track. So I kind of have a feeling that there might be some financing going on there. Is that a timeline that we could theoretically meet?
I think so.
Because I'm all about getting ready for NEASC. That's serious business. But I'm just wondering if we can pace ourselves. I'd be okay with pacing ourselves to get ready for that. Jim, go ahead.
Aaron, I completely agree with you as far as the, do one project this year, one the next year, one the following year. But when it comes to the track, if I think Rhonda would remember back 5-6 years ago, they were talking about doing the track, and it's big money, big money. This is something that we have to take some real serious consideration about doing, because it's a lot of, if I can remember right, it was over $500,000 the last time I think we spoke.
I guess.
So
Go ahead.
The building committee is in the process of assessing that. I do know that the track is on their agenda. I think that's why Mr. Rice needs those funds. They're planning on doing some borehole drilling to see what's under the track and have an assessment of that. So I do know the building committee is working on that, but I don't know what the price tag is. We have to wait and get those samples back.
Okay. I imagine it's pretty safe to say we're going to be in the $400,000 to $500,000 range.
Oh yeah, definitely.
If I might, I think this is more than just preparing for the next accreditation review. This is where our students live or work or study. So it isn't just satisfying some accreditation committee. It's really the real need here is to provide appropriate facilities for our students. If I recall, 5 years ago, I heard a member of this committee saying when they visited the school that it looked like we were in a third world country. We don't want to be like that. Let's have facilities that are appropriate. That's something we could be proud of, as Rob mentioned.
Yep. And Steve, I agree with you. Just like I would like to give Rich Benoit a roll-off truck and a 9-ton dump truck right now. I would love to do that. I would love to go down the list of all the things that we want to do right now and just do it. The reason I ask if we can pace ourselves is because then we can provide the services that our townspeople need in a way that's also as reasonably respectful as possible of the taxpayer's ability to pay. That's all. I'm trying to find that balance, just trying to find a balance between getting things done and trying not to hit our taxpayers too hard.
Can I ask a quick question?
Yeah.
I guess to Melinda. Is there in the school budget, I'm assuming there is, but a repairs line that, if, let's say, for example, and I'd like to have everything fixed, the trucks and like Aaron just said, but so that you know, like classrooms and different things like that, they get repaired every year as they go, as something happens, so that they're not in total disarray? Or did you just, you know, in general is a question.
So for example, there is a painting cycle and Bill Birch budgets every year, and he talked about that during his budget presentation. He does so many classrooms in each building every year. It's a slow process, but that is a cycle that he has built into his budget so that a few classrooms in every building get painted every year. So he does have a good painting cycle. So general maintenance, he does have in his budget. It's these bigger ticket items that are not in his budget.
And the locker rooms, I know we went on a tour a couple of years ago and they didn't look good. Did we do something to those locker rooms though in the last 3 years? Nothing's been done. I thought something got
No.
fixed over there, but maybe it was the floors in the gym or the workout room or something like that.
It was
at
the
one time.
workout room. Yes, we put
Okay.
in new flooring. New flooring went in the workout room, but the locker rooms haven't been touched and they're in bad shape.
So the
It would be-
locker rooms would be the more important of the two if you had to choose one this year and one next year?
I
Just
think that's
curious.
for the board to decide and Bill Birch. But you know, aesthetically, when I go in those locker rooms, it doesn't look good.
No, they
Um,
don't look good. I went in them.
Yes, plus the potential of a kid getting cut, but there's also the potential of tiles coming up and somebody falling. So, you know, that's not a decision I would make. That I would divert back to the board to see what they would prefer to repair first.
So here's a hypothetical. Perhaps we could appropriate in this budget $40,000 for a deferred maintenance / repair item to consist of either hall flooring or upgrade to locker rooms while allowing the Board of Education to decide what their priority will be. And I know that's a lot of words to put into a line item in a capital improvement plan, but maybe there's a way we can massage that. Go ahead.
Can I ask one more question? So Melinda, you had mentioned it's the hall floor, the locker rooms, and the science lab. I'm sorry if I'm mistaken,
Yeah.
some kind of lab?
There was some upgrades to the science lab, and we haven't really even costed that. We haven't really assessed that.
Okay.
We will look at the more immediate safety issues.
I was just gonna say, if you knew what the cost was, maybe we could take the 3 and divide them by 3 and put the same dollar amount every year, and just so that you can chunk away at it. Okay. Sorry, Aaron.
No problem.
Rob, man, I have a concern about the locker rooms. I mean, we're getting out of COVID here. I'm more concerned. I know that she said there's tiles peeling up, but I'm more concerned with how can they be made sanitary if they're falling apart? I'm concerned with that.
So,
This is where kids walk around barefoot and take showers. I mean, that's concerning to me.
so I'll tell you what, here's what I'm gonna do. I'm gonna make a motion that in the capital improvement plan, under schools, we combine the 2 line items called hall flooring and upgrade to locker rooms, so that it says hall flooring or upgrade to locker rooms. And we assign dollar amount $40,000 to that line item. That's my motion.
I'll second that.
Okay, so that means we would be taking out the 37,517
Yeah.
and just combining them and making it $40,000. So just so everybody understands, that's what the motion is. So I got the motion, Jim's got the second. Any discussion on that motion?
So be crystal clear, it's not saying yes to 40 and then we'll think about the 37. It's saying only the 40.
That's right, it's saying here's 40, and we don't want to tell the Board of Education if they have to, you know, we're gonna ask them, obviously, we're gonna require that they pick which one they wanna do first. But we're gonna give them the opportunity to pick, instead of telling them that we think the floor is more important or the locker room is more important, the lockers are more important. We're gonna give them the opportunity to decide which one they think is a higher priority. And knowing that $40,000 will cover either project, here's $40,000, you guys pick.
Aaron, should it technically say or? I don't wanna-
That's it. It should say or.
I don't want to hang on words, but that looks like both when you have a slash, Orla. If you don't mind, Orla, I know it's minor, but
Oh, yeah, I want to put or.
Oh, okay.
I definitely want to put or.
my comment, Aaron, is I'd like to see both done, but I think given that we can't do everything, this feels like a reasonable approach to get something started, far better than not doing any. So I think it's good to get one of the projects done and we can address the other one next year.
Any other discussion on the motion? Any other discussion? Okay, we'll go around the table. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
Yes.
Steve,
No.
Rob Urge.
Yes.
Yes, this one carries 5-1. And so Orla, I'll give you a chance to put that into the spreadsheet.
Thank you.
Aaron, can I tee up another topic while she's moving those around?
Yep,
I'd like to have a short discussion around the ambulance.
yeah, me too.
I still
Oh,
feel like it's misplaced where it is. If we move it back into the fire and rescue and we want to decouple it from the community, just like the other 5 fire departments are decoupled from each other, I think that might be more appropriate to slide it over into that category.
I agree completely. 100.
Can I, this is Suzanne Witkowski. Can I speak on that?
Yep, go ahead.
So we asked that was my suggestion that we put that in a transfer fund because there's concerns about the stability of the ambulance. We don't want to find that we have to outsource the ambulance service after we have given them the 75,000.
Right.
So we requested that it would be in a transfer fund, that they could request the funds as needed.
Is there a way we can put this into a transfer fund / account so that it's not sitting in the capital improvement plan? Because as Rob Wurge observes, it's just the location in the budget is what's causing him and me to have a problem with it, because this is a section of the budget that has to do with capital infrastructure, whereas that's an operating expense.
Is the fear that the 75 would be spent on day one and then the ambulance service leaves town, and is that the?
Yeah, there's talk of, there's some concern with them disbanding from what I understand. And they have had some issues throughout the year that we've been made aware of. So we kind of want to have a little bit of a safety net, so to speak, should they disband, that we can look at either outsourcing or other options.
Could I make a suggestion there?
Go ahead.
The suggestion, Suzanne, to address your concern is to move it over and disperse it in equal increments throughout the 12-month year. So 75 divided by 12. And then in any given month that they leave, we're only paying for services that are provided.
You know, Rob, I think that makes a lot of sense.
Yeah, me too. Is there a way to structure that in this budget that we can put that kind of control on it? On the operating side?
That's an excellent idea.
I'm all for it.
It sounds good.
Orla?
Yeah, what do you think, Orla?
Yeah, we can do that. Yep, that's
Good.
fine.
So then, I'll tell you what, and Orla, you can tell me if I'm out of line with this motion, but we take the $75,000 appropriation for the community ambulance service and we move it back into the operating budget to be dispersed in 12 increments over the course of the 12 months of the fiscal year, starting July 1st. And then Orla, that gives you the flexibility to locate it in the way that you feel it appropriately should land on the operating side based on the way. So it gives you freedom to make it work the way that you know that we want it to work.
Sure.
So that's my motion. Is there a second to that motion?
I'll second that.
So Steve's got the second. Any discussion on this?
Ask you one real fast question. So I just want to make sure I'm understanding this correctly. So the community ambulance is 75,000, but the other 75,000, is that still on the table? The one
What
that's
others said?
in
Are you
capital?
asking?
Because you got 75,000 that for the community ambulance, but then there was another 75,000 in capital expenditures
The
that
motion,
Suzanne was talking about. So that's a total of 150,000. Is that correct?
but the motion is to take that 75,000 that's in the capital improvement plan and lift it out of there, and then drop it back into the operating budget.
Okay.
What-
Okay. I just wasn't clear on that.
Good concern. Thank you for raising that. With the condition that the 75 be dispersed in 12 increments to reflect the 12 months of the fiscal year.
Okay.
And Aaron, Rob Wertz here, to be clear,
Do
we're
that
not,
now?
we're not approving or voting on the 75. We're approving and voting on where it's located and the disbursement methodology.
Yeah, good point.
So then here, I'm going to amend my motion to say that we take the $75,000 that's in the capital improvement plan, $75,000 for community ambulance service, we put it back into the operating budget, and we disperse it in increments of, in 12 increments, subject to the community ambulance service continuing to operate the way that it has, and that if for some reason it significantly changes, goes out of business, changes its mission, you name it, whatever, if it changes drastically, then the remaining payments, wherever the remaining payments are, they stop. That's a long motion. That's a lot of words. So I'm not sure how to condense that down. But that would be all the words I would attach to that. If that sounds consistent, Rob, words with what you're thinking.
It does.
So I'm sorry, Dottie, to stick you with such a painfully long motion, but that's my motion. And Steve, did you have the second on that? Who had the second on that?
I'll have the second.
Are you okay with amending your motion to that effect?
Absolutely, yeah.
Great, thank you, Steve.
Sorry, I'm not sure about that.
That must be Dottie. Any discussion?
Suzanne, good insight, though. Good insight on that.
Any discussion on this motion? Any discussion on this motion? We'll go around the table. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
Yes.
Steve,
Yes.
Rob Wirge.
Yes.
I'll vote yes. This one carries 6-0. Anywhere else anybody wants to visit in this budget? Because I would like to revisit animal control. And Orla, if you got to move some numbers around and do stuff, that's okay. I don't want to mess you up. If you're still doing numbers, I don't want to mess you up.
Sorry, I had you unmute. Yeah, I'm just double checking a couple of things here.
Take your time. I know when stuff comes, we get in these budget sessions where we start firing a lot of stuff at you real fast, and I don't want you to miss something.
No problem. Thank you. I'll go back now in a moment. Excuse me for a second.
Aaron, Rob Werge, now that we moved that 75 over, would you mind real quick going back to the front page before we jump into the animal control?
Okay
Take a
with
look
me.
at the 13.3% general town increase and see where that is.
So The only thing I took out here is the additional recommendation on the school. So we had the two amounts, 37. I'm just thinking out loud here, so I want to make sure I have my correct notes. We have taken out the 37, correct?
Yes, the 37. and
Correct.
20.
Okay, so I just moved the 40,000 into the capital improvements for building improvements, which is where it eventually would have gone anyway. I just did it now. Okay, and the only other reduction I see is the Bull Hill. We already got that, and library roof. Okay, we already did the two capital items. Okay, let me swing back. You want to go front page, Rob Borge, right?
Well, I just thought we,
Yeah.
Aaron wants to go to K-9, but I just take a quick look at
Sure,
where that
yeah, let's go to front
13.3
page. Oops. Somebody said-
Okay, that's what we're looking at right now.
14.2. General town, 14.2%.
Where are you seeing the 14.2?
C22?
Oh, yeah. Here we go. Which is the increase in the budget.
Correct. Okay. I just want to get regrounded on that. It was 13.3
Appreciate it.
originally.
Oh, yeah. Oh, right. What does the 75 do?
Yeah.
Yep, good. Okay. Rob, were you good?
I'm good. Yep, sorry. Yep.
No problem. So if we can go to 2401, that's page 46.
Okay, 2401. Okay, do we want to go through page 1, page 46? Oh, you want to go to the detail. Okay, here we go.
I'm just thinking, and I don't know if maybe this is a question for Amy, but what is there opportunity? What is the opportunity for the, I think of it as the dog fund. I don't know if that's the correct
That's
name.
the correct name, yes.
But what is the opportunity for the dog fund to cover some, dare I say all, but some or all of the proposed increase here? Is that a possibility?
This is Amy St. Ange. If I remember correctly, Orla, what was our portion of the dog tags? Was it around 12,000?
Yes, annual
Um,
basis of $12,000.
If that was the case, I mean, I thought that we could drop the bottom line by at least that 12,000. We should use the revenue that we earn from the dog tags, the registering of the dogs, to help reduce this budget. That seems like that would be what would be responsible. And that would bring us more than flat. That would bring us, should bring us less than what we were at last year.
And that seems fair to me because that's what we do with the transfer station. People who want to throw away their trash at the transfer station pay a fee. So if you got a dog, you pay a dog license, and that helps to defray the cost of animal control services in the town.
Could I ask a question?
I have a question. Is that already included in the revenue line, Orla?
It's not in the general fund, it's in the dog fund. So the cost is broken down. A portion of it comes to us, a portion goes to the state, and $1 of it goes to the town. So if we go back to the revenue line, there is dollars in there, but it's not 12,000. I think it's 1,200. Let me just check.
And if we didn't
Thought it was
do
a dollar a tag.
if we didn't
There we go.
do what Amy's suggesting, that 12,000 would land in the animal control fund, the 52,000.
Yes, it would not end up in here.
Then I agree with Amy's recommendation. That's a very appropriate place to use the funds.
Right.
Well, let me ask a question. I thought the town kept $1 of each dog tag,
We do.
but the rest goes to the state. Am I wrong on that?
Some of it does. I can't bring the activity up right now, but see if I can do that.
I mean, if we do get 12,000, that sounds like a great use of it, but if we're only getting $1 out of it per tag, it's only not going to be $12,000.
I have to do the research. I'm sorry, I won't be able to bring it up tonight because I can't get into this particular part of the system right now. I know it's 7 minutes past 9. You'd have to give me about 5 or 10 minutes to try and log in. See if I can get in, okay? Um, So even if I can't get into the system, I have to go into remote access to try and access the system right now. It may fire me out from the Zoom call. If it does, I will dial back in again, but either way, should you choose to
You're muted, Orla.
Orla, you there?
No, I'm not. I'm not muted.
Good.
You cut out for a minute.
That's weird. Okay. It's probably because I'm trying to dial in to the remote desktop. So just give you a 5-second version. So even
Renee
if,
just jumped in, Orla. Sorry.
Yeah, go
Orla.
ahead.
Renee jumped in on CAT. It's about $1,200.
1,200 is what goes into the general fund.
Yeah.
Um,
And that's already accounted for in income, I believe.
It is correct. There's a lot of activity in the dog fund that I want to actually try and bring up if I can. But even if I can't determine the specific dollar amount tonight, and I have to provide it for you guys tomorrow, should you decide to appropriate something from the dog fund, we do currently have funds in the dog fund that we could use certainly to cover the cost of the difference, the 8,160.
I think that, I would suggest that, because we have what, 60,000 in that fund or what?
No, we don't now, because you appropriated 20,000 out of it. I think we had 73.
But I'm
So,
I'm certainly good with 8160
70.
and then thinking a little bit more if we think it's reasonable.
I think it's 53 we have left, but I'm not 100% sure. Can you guys hear me?
Yes.
Okay,
My notes match 53, Orla. That's what I had from when we went through.
Yeah.
It was 73 and you took 20 out, we're at 53. If we took 8 more, it'd go down to 45. I could support Rhonda's.
Yes, 53 is what I got to.
so we do pay we pay a large dollar amount back to the state. But I don't actually have the breakdown here. 1 second.
Well, Aaron, getting to your point, I think using $8,160 to offset the increase would be great.
We can just, forgive my phraseology, but we could just shoot from the hip on that one right now. So I'll make a motion that we reduce, sorry, hold on a second. I'm gonna find this so that I say it correctly. I'm gonna make a motion that we reduce the Department 2401 K9 Control Operation section of the budget, that we reduce it by $8,160. Now that affects a whole bunch of line items that I didn't mention, but it is implied that all of those affected line items are hereby sort of resolved as a result of taking 8160 from the bottom line of that section of the budget. So that's my motion, is to reduce that by 8160. And is there a second to that motion?
I'll second that.
Rob Dan, I'll second it.
Steve's got the second by a fraction of a second. Any discussion on this motion?
Yes.
Go ahead.
Are we going to put a motion in to take that 8160 out of the dog fund and put into this?
I'll tell you what.
How does that work, I guess?
I'll tell you what, we can make that the follow-up motion to this.
Okay.
Any more discussion?
Do we need to identify the line? I don't know if we want to, it doesn't matter, I guess is the question.
You mean the individual line items?
Yeah,
I know, and that's kind of why I said, well, I know that 8160 impacts a whole bunch of line items. And so my motion here by bringing 8160 down to 0 implies that all other line items that need to move as a result of it are hereby moved.
So Aaron, I'm sorry to interrupt you there, but I'm just going to bring up, do you still have access to the book that I'm showing you?
I've got the book, yeah.
Okay, so if we go to other sources for revenue, okay, we have a line in here, inter-fund transfers. This is where we transfer money among funds. This is where this 8160 will go in. It will reduce the need for an additional $8,160 to balance the budget, and therefore will reduce the mill rate increase. But it won't necessarily be in that line item. I will create a line item here saying interfund transfer dog fund. and the amount proposed will be 8160.
I see what you mean. So if I follow you, what you're saying is we're not going to see the 8160 show up right now, but after you get a chance to work with this spreadsheet tomorrow during the business day, then we'll be able to see it because you'll create something new there.
Yeah, I'm actually going to just put in the dollar amount here, so we'll make the calculation. But what
Okay.
we're showing is that we're taking 8160 and we're taking it out of the DOD fund and we're putting it in the general fund.
So rather than decreasing the canine department, we're increasing the income.
Correct.
Thank you.
I see.
We talk about percentage of budget, which is our fund balance percentage of budget, but for GAAP purposes, this is how we handle this transaction. We don't touch anything on the dog department line. We treat it as a transfer in from another fund into the general fund.
So good. That means the motion that we have on the floor is probably pure and correct, because then we can make a separate motion that addresses what you just described, Orla.
Yes.
Well, Aaron, I'm not sure.
Because if we eliminate the dog fund by 8160, that's one side, and then we say now hereby have 8160 from the dog fund go into the general fund. Is that what you're saying, Orla? Isn't that kind of a separate transaction?
That's double counting, I think, Aaron.
No, we're not. We're going to. So let me go to 2401.
So then,
We're going to leave this as is.
okay.
We see that there's the increase. I'm sorry, just bear with me. Before we do this, I want to make sure that our formula is correct, because we want to make sure that this is the actual dollar amount that we're looking at.
So then that means, if I follow Steve, the motion is not to reduce the dog fund by 8160. The motion is actually to accept 8160 from the dog fund into the general fund.
Correct.
I think that's correct. I
So-
think that's right.
So, Steve, I'm going to withdraw my motion if you want to withdraw the second.
Yep, absolutely.
Great.
Bear with me 1 second. Okay, we're good. So it's 8160.
Yep.
And we're going to leave it as is.
So now I'm going to make my motion, which is I make a motion that we withdraw 8160 from the dog fund and we deposit it into the general fund.
Yes,
Okay, that's my motion.
we transfer it into the general fund.
We transfer it into the general fund as part of this FY22 budget. That's my motion.
Yes.
I'll second that.
Okay, so I've got the motion, and Steve's got the second to transfer 8160 from the dog fund into the general fund as a transfer as part of the FY22 budget. Any discussion on this motion? Any discussion? Okay, we'll go around the table. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
Yes,
Steve,
Yes.
Rob Wurge.
Yes,
I'll vote yes. This one carries 6-0. There's one other area in the budget that I wanted to visit tonight. And Orla, I'm going to give you a chance to make some changes before I.
Sure, go ahead.
Nope, you just take your time.
Yep.
Better to take a little extra time and get it right. I don't want to mess you up.
Thank you. Okay, so we see a decrease of 275. Okay, I think we're good.
So I'd like to go to general services, which is Department 4101.
Okay.
And that's page 65 in the booklets. That's Department 4101, page 65 in the booklets. And we were talking about Northeast Transit District, which is line 522521. I've got a note here that says, town asked for reduction years ago and we may negotiate. Let's go with 4 or 5 here, maybe 2 or 3. So I'm gonna make a motion that we reduce this line item so that the increase is $3,000 instead of 8208. So that's a reduction of $5,000 to line item 522521. That's my motion. Reduce it by $5,000. Is there a second to that motion?
I'll second that.
Tim's got the second. Any discussion on this motion?
Aaron, if I could ask, is the option, if this is not acceptable to the provider of the service, do we just not have any service at all?
My understanding is this is from the first go through of the budget. My understanding is this is negotiable. That this is a requested dollar amount, but there's room here. Maybe I'm misunderstanding, but that was my impression from the discussion. Is this there's flexibility on this one.
Aaron, is this the letter that we received that said that there was no negotiation?
So
Think of the
I'm
health
going
department.
to share with you that I received a letter from email from Ken Slater saying that the item that's like a couple of public health, NDDH, he said there's no room to negotiate. It's basically a tax. You have to pay it.
Correct.
But this is Northeast Transit District, and my understanding from the first run through all the explanations of all the line items is I wrote here, we may negotiate. This is not a chiseled in stone number here.
And this is Amy St. Ange, and I concur with what Aaron is saying, that John Filchek had said in his letter that this could be broken down over a couple years. The increase that we would be facing could be broken down over a couple of years. So I think it's absolutely acceptable. Knowing what you want to offer, I can go to him tomorrow and say, this is what we have in our budget.
Just Rob Mann, here in my notes, I put report of ridership, and it said somewhere, somebody had mentioned that Putnam pays $20,000. And we know they get probably a lot more service than we do.
I'd add, Rob Wurge, Amy, that even the generous 3,000 is over 20% increase. That's 20, less than 25, but more than 20. That's a sizable increase.
Just leave them outside, I'll fix them.
So is there going to be a decrease in service as a result of this, or no?
No, there should not be.
Okay.
If this is just paying less and getting the same service, I'm all for it.
Any other discussion on this motion? Again, this is a motion to reduce that line item by $5,000 to bring it down to 3208. Any other discussion on this motion? We'll go around the table. Rob Mann,
Yes.
Jim,
Yes.
Rhonda,
Yes.
Steve.
Yep.
Rob Wurge.
Yes.
I'll vote yes. This one carries 6-0. Is there anywhere anybody else wants to visit in this budget before we?
I have an area I'd like to jump to.
Go ahead, Rob Wurge.
I'd like to jump to Department 1201, First Selectman. And apologies.
Bear with me 1 6.
Yep.
And $3,000. Okay. Okay, we're going to 1201, right?
Correct. My question is probably jointly between Amy and Melinda. And apologies if this was asked already, but we have the addition of an HR person. We talked through that.
Yeah.
I don't recall, I looked through the school side. I didn't see the 30,000. I see approximate 60. I see the 30,000 in the 1201. That'd be line item 5100XX. Is it in the school side? And are we covering this full salary if we go forward?
It is on the school side. We are going to reduce the legal line and use funds from the legal line for the HR coordinator.
And will that balance out, Melinda, or is it just a partial recovery?
Between the town and the Board of Ed side, it would balance out.
On the town side, we have a minus 15 on the legal and a minus 25 in this line item for a second assistant. That's 40 of the 60. You have at least 20 in the school side on the legal line to balance out the rest of the 60.
I think it's even more than that we were going to pull out of the legal line, primarily because we're using the attorney to do HR functions.
Right. Yeah, we talked about that. And I think a lot felt like that made sense. I just want to double check, cross check the numbers, that the numbers match the overall approach.
Anything else?
Aaron, it's Rob. Given the time, I'm okay with just touching base on this. It's more of a verify it. We can touch base on it on Thursday if give Melinda a little more time.
It's okay with me. Yeah, so you don't have to move the spreadsheet around, Orla. This is just while I'm thinking of it. This is Ken Slater's email to me. Aaron, I am well. Hope you are also. Unfortunately, the town's obligation to pay the health district is akin to a tax on the town and is a non-discretionary legal obligation upon each member town. Each of the member communities have representatives to the board who are collectively the ultimate decision maker on the budget and resulting payment obligation on the member towns. That's it.
Make one quick comment in relation to the concerns that the Board of Finance had for the town of Thompson. The town reps for Thompson opted to abstain from the vote on the budget.
I probably would have voted no.
Who's a rep? Who's a rep?
It was actually, I'm the rep, but I was not there, so my alternate was attending on my behalf, and she chose to abstain.
Okay. Anywhere else anybody wants to go tonight? So here's the thing. I reached out to Ken Slater to talk about the NDDH because that was really weighing on my mind. I wanted to get an answer on that more badly than getting an answer on how to juggle Thursday night's meeting versus a meeting the following week. So here's what we can do, and I know we can do this. This is right in Robert's rules. We can create an agenda for a regular meeting, which is, first selectmen's report and school Board of Ed report and all that stuff. And then all you got to do is make a motion and have 2/3 of the members of the board agree to skip down. So just for the sake of checking off the box and having a quote regular meeting, we can just put together a regular meeting agenda. And then right after citizens' comments, we can just make a motion and a second and a vote, 2/3, skip all the usual stuff, go right down to budget workshop, and then pick up where we left off. And then if there's time, then we'll go back up and we'll do all the regular things. And if there isn't, then we can have a special meeting the following week to cover whatever those things are that we feel we need to cover. But at least this way, we have a regular meeting agenda for our regular meeting date. Go ahead, Rhonda.
Me? When do we have to have the budget out? I mean, what is our deadline Thursday,
That's right.
or is it today?
No, our deadline's Thursday.
Right.
That gives, Marie and I are going to work on Friday to get it ready for legal notice to go in the paper on Monday or Tuesday, I believe. But yes.
So if there's any pressing town business that otherwise would have come before a regular Board of Finance meeting that doesn't get to do so on Thursday, we can just have a special meeting the following week to address that single item of town business, or 2 or 3. But if there aren't any, then no harm, no foul.
Aaron, there's a question in the chat about benefits. I think people are wondering where the HR director's benefits are. Whose budget is it in? Is it in the town's budget? Is it in the school's budget? I'm not sure whether that question has been answered yet.
I don't know. I guess
This is Amy St. Ange. I mean, is it appropriate to answer the question now, Aaron?
it's okay with me.
Okay. According to the way Brooklyn handles their HR director that is shared between the school and the town, 70% of that salary, including benefits, is charged to the school, 30% to the town. And again, that was inclusive of benefits.
I think the question is, are the benefits included in our budget?
Well, I guess it's, I know they're not included in the town's budget. I guess the question was, are they included in the school's budget? Keep in mind, Amy, that district has a smaller school district in it, so the 70-30% would make sense because the amount of employees on the school side would be a lot less than us. They only go through 8th grade.
So do you think, Orla, that the 70-30 is unreasonable for us?
Might be. It might be. Because our Board of Ed has much more employees than their Board of Ed would. But I know that's not necessarily a discussion for today. I'm just thinking out loud. That's all.
Melinda says she believes the benefits are included.
Okay.
She adds that she believes Brooklyn has the same amount of students. Actually,
Really?
she didn't say she believes that. She stated Brooklyn has the same amount of students.
Wow. Okay.
Okay. And maybe more, she says.
Oh, wow.
Okay. Anyone want to
It
go?
might be them realistic then, Amy.
Anyone want to go anywhere else in this budget before we call it a night? Orla, could you do us a favor and just come back to that home page to remind us where we are? And could you scroll just a tiny bit lower so we can see? There we go. Okay.
I've got a few areas, Aaron, but I think I'd rather wait till Thursday. There's two other areas that I think I'd like the group to touch on.
Works for me. Okay. Motion to adjourn?
I'll make a motion to adjourn. Rob Word.
So Rob Word has made a motion to adjourn. Is there a second?
I'll second.
Ron's got the second. All in favor of adjourning signify by saying aye.
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 Anyone opposed? Anyone abstain? This one carries 6-0. This meeting is now adjourned and it is 9:30 p.m. Have a great night, everyone. We'll see you on Thursday.
Thanks, Greg.